What's up, everyone? It's Scotty with MoneyVest. So it's that time of the week. I'm going to go over every single stock's technical analysis in the Magnificent 8. So we're going to cover all these companies. We're going to break down exactly where the technical analysis is, levels to watch, so that helps you in your trading for the upcoming week. And I'm also going to point out exactly whether we are in an uptrend, a downtrend, or coming up to a resistance, and how that pattern's shifting and how that could affect the overall market. Because at the end of the day, let's face it, 29-30% of the indexes are made up by these companies, by these big tech companies. So that's exactly what we are going to discuss in this video. Hope you guys enjoy it, find it helpful. All I ask in return is that you drop a like. It does take a lot of research, a lot of analysis putting together these videos. So I would really appreciate you guys' like and subscribe to the channel if you haven't already. And link to our Discord and Patreon is going to be down below if you're interested in joining. And of course, getting access to all the buy and sell alerts, options alerts, trade ideas, members only videos, our individual stock reports, our private videos, of course, and our Excel spreadsheets as well. So links are going to be down below, and we'd love to have you on board. So first things first, this right here is going to be the list. I've got the S&P 500, the NASDAQ, then I've got Apple, Amazon, Tesla, Microsoft, Google, NVDA, AMD, and Meta. And what I'm going to do is I'm going to write down exactly where we are in the process: downtrend, uptrend, breakout, hitting its resistance. We're going to type all that out so we have a clear understanding on where these technicals are for individual stocks and how the markets can be sort of like shaping up for the weeks ahead from a technical standpoint. So first things first, we are going to, actually I just need to pull up the presentation that I created for you guys. So just give me 1 second here while I do that. So there we go. This right here are going to be all these screenshots, which are going to be over 30 of them. So that's a lot. And this right here is, okay, we're all set. Just give me 1 more second. First things first, we're going to go over the 10-year yield. So that's what we are going to cover first. And this is the move on the 10-year yield since August of 2020, right? So such a massive gain for the yields. We're approaching almost a 900% gain in that time period since August of 2020. So that's been a little bit over 3 years. And we are now sitting obviously at over 4.9%. And we are coming up to the same levels from back in 07, 08. So this has been the trend overall for the 10-year yields. And what you'll notice is that we shot further. So we basically overshot to the downside, and now we are overshooting to the upside. So that's really what happens, on both sides. Markets, rarely trade at their fair valuations. They either trade undervalued or overvalued. And this has been the overall trend for the 10-year yields for the longest time. And then it overshot to the downside, and now it's overshooting to the upside as it continues to rally past 4.8, 4.9%, approaching this level right here, which is coming in since 07, 08. And this is a more zoomed in version of that chart. And again, you'll notice that we are on this very nice consistent rally. And this was a little bit of a consolidation for the yields. So, consolidation, then a huge breakout over here, then consolidation, and then a huge breakout over here. So that's really what's been the pattern for the 10-year yields quite some time: consolidation, consolidation, and then breakout. And that is going to be that next resistance to watch at pretty much 5 to 5.138%. And that's the same level coming in since, as I mentioned earlier, since June and September of 06, 07. So these right here are pretty much the double resistances, or double tops, if you want to call it, for the markets that are coming from basically 06 to 07. And if you fast forward to where we are now, that red rectangle is kind of following us up, and that's going to be sitting between 5 and 5.24%. Now, I have no doubt in my mind, honestly, that we could get up to 5%. Like, literally, I feel like the market's kind of eyeing that level, for quite some time. And like I said, I wouldn't be surprised, considering all the auctions, considering the imbalance with the supply of bonds, corporate bonds, and the government issuances. I just wouldn't be surprised if we get up to over 5%. Just don't be shocked in an environment where yields, or 10-year yields, or specifically are trading at over 5%, because it is a very real possibility. We're only 20 basis points away from that level. So, it's not going to take long for the yields to get up to that level. And this right here, where we would be if we break out over that level, over that 5% threshold, then the next resistance is going to be sitting roughly at around 5.25%. That's not the best line, but this right here is going to be that level that's going to be sitting, actually, I believe a little bit over 5.4. So 5.4% is going to be that next resistance in case we get a breakout above 5.25 and 5%, and that's going to be a level from 2001. So this right here is going to be that level, and that's coming in since 01, right? So right after the dot-com bubble burst. Now going over to the dollar, And the dollar has also started to pull back a little bit, which is actually good news for the market. So this was actually a week where we were down. So we were down about 0.07%. I think nothing crazy, but we did see a little bit intra-week sell-off here. We got up to as much as 107.75, and then we close in at just under, 10, just a little bit over 106. So we did see a bit of an inverted hammer candle where a lot of sellers kind of stepped in. The dollar started to pull back, and there is going to be a support sitting roughly at around 105. So that's going to be that level to watch, but a very, very nice consistent gain week after week for the dollar index, right? The dollar index continues to strengthen here in the last several weeks. Now, going over to the markets, I've done some analysis on the S&P already in one of my previous videos, but, talking about the 200 SMA bouncing off of that level very, very nicely. We saw a very nice lower highs and lower lows down almost 8%, a little bit over 8% from those levels. Not a lot of opportunities to dollar cost average into, but this has been one of the more serious buying opportunities, similar to what we witnessed back in March, similar to what we witnessed back in December, and similar to what we witnessed back in October of last year as well. The mother of all trends, basically this trend line, which got validated here, during COVID, during the October lows, during the March lows, and during the September lows and October lows of 23, continues to get validated as we continue to find support at this trend line, at this higher low, at this support for the S&P 500. So we are still very much in an uptrend, I would say. However, within the context of this downtrend, we are very much making lower highs and lower lows, and we could be possibly heading back up to retest this lower high. That's going to be sitting right there. And the first resistance we got to tackle right now is this one. And that's going to be at 43.30. Close to 4,300 to 43.30 is going to be that resistance first. And then beyond that, we're going to be struggling or possibly heading up to that lower high in line with this downtrending channel, as I mentioned earlier. And of course, beyond that, we're going to be looking at this right here as a very important level at 4,600. And that's going to be the same exact level where we got rejected back in August of last year. So that's going to be even more of an important resistance, but that's also going to be breaking out over our more near high that we got rejected at from back in July. So there are certain levels to pay attention to, but to keep things very simple, we validated this higher low very, very nicely. So that's something that's very good, but we are still within the context of this downtrend. So next resistance at around 43.30. And beyond that, we're going to be watching this lower high. So what I would put down on the S&P 500 is basically that we are still in the context of a broader uptrend, right? And then within a shorter downtrend, right? That's what I would put down for the markets, because it's important to us for us to understand that, okay, within the context of a broader trend here, we're still making higher lows, we're still making higher highs, but we are very close to a potential trend reversal, right? So on a shorter time frame, we're still making that downtrend, lower highs and lower lows. So there is a possibility, not saying that that's actually going to happen, there is a possibility that we shift that trend, because these patterns take a long time to evolve, right? It takes time for them to develop. It's not like, one fine morning we see the market sell off and the pattern reverses. No, we sell off here and then we push right back up. We sell off here and possibly push right back up. It's possible that we sell right back down to the support and then make a new low at 4,100, right? That's a possibility. And that's exactly what I want you guys to understand, that unless the S&P breaks out over 4,500 and takes out that high, we're still in this lower high and lower low pattern. Talking about the NASDAQ, almost an identical pattern, so very, very similar to the S&P 500. So this right here is going to be that lower high and that lower low within which we're trading. Very nice validation there and getting back up to that resistance. So that's going to be sitting roughly around 13,800, close to 14,000 points, and a nice validation at that support here from the markets at 13,200, previous resistance where we have gotten rejected for the NASDAQ as well. So I would put down the same exact thing for the NASDAQ as well, a broader uptrend, because we're still very much making these higher lows and, of course, these higher highs. So that right there, higher highs and higher lows. So very much still in the context of an uptrend, broadly speaking, but within the context of this downtrend, as I mentioned earlier, same thing for the S&P 500. Now, going over to the Apple stock here. So Apple is also almost identical to that of the S&P 500, although it did break down from this right here, the uptrend. So this right here was a very nice uptrend. Then we had a very solid breakdown, sold right back down to, $172, and then rallied back up and then sold back down to new lows. And now we're making our way back up. So this is the downtrending channel, exactly what I'm talking about, where we do end up making lower highs and lower lows. So it's nothing been confirmed yet. And the next important level is going to be inside this red circle. Not only it's in line with this lower high, but also a previous horizontal resistance sitting roughly around $180. So that's going to be that level to watch. And right now, Apple, I would simply put down that it's still in very much of a downtrend at the moment. That's what Apple is doing right now. $180 is going to be that level to watch and support at that lower low. roughly around close to 160s, and 157 could potentially be the next target in case we get rejected there, and then of course selling right back down to that target. That's going to continue our downtrend for Apple. But of course, if it does end up breaking out here, then that pattern would be invalidated, and it's possible that we head back over to 190s and possibly even to new all-time highs at over $200 per share. Next one on the list is going to be Amazon. Amazon also is very much in the identical pattern here. So it was in this higher high and higher low pattern up until this point where it started to break down from that higher low and started making lower highs and lower lows. So this right here was a lower high, lower low, and it's possible that we make our way back up to this lower high in the process. It's possible that we also fill in this gap, and that resistance right now is going to be sitting roughly at around $135, $137. So that is going to be that level to watch, and of course support level very strongly sitting at around $121 per share. So that is exactly the pattern to watch and follow for Amazon. Still very much in the context of a downtrend, very similar to that of Apple. So we're going to put down same thing for Apple as well. Tesla is also, I would say, kind of an interesting one because it is both in an uptrend and in a downtrend at the same time. So, more broadly speaking, we've got this as an overarching, sort of like a rising, falling wedge pattern, not really kind of converging, but like more like a widening falling wedge, if that's even a thing. But that's really where we are, where that white line's kind of been following us since 2021. But since the October lows, Tesla's done a really good job in kind of pushing up, making higher highs, higher lows very, very nicely. But once again, if you take a look at the shorter time frames, we are, starting to make a little bit of those downtrending channel. However, I will point out that in this battle between the bulls and the bears, the bulls won really well because Tesla validated this higher low really, really nicely. So in other words, it validated the green line as opposed to the red line down here. Right? So if it were indeed in a downtrend, if we were making actually lower highs and lower lows, then the pattern would have looked something like this. We push up, come down, push up. When we were coming down, instead of bouncing off of this level, we would have broken down here and then come down to this lower low. But instead, we validated that level. So this right here, we came down, we came back up, we came down, we validated this higher low, and then we started pushing back up. So the bulls really won in that battle so far. But of course, we'll find out next week if Tesla can break out above this level or gets rejected at this lower high yet again. So this right here is going to be that level, gets rejected, and then starts to make its way back down to that support inside this green rectangle sitting roughly in the low 200s. So that's going to be the level to watch. But one thing I will mention about Tesla is that it's definitely coming up to a lot of resistance. So this right here, the box that I just mentioned, not only do we have a lot of supply from a horizontal resistance standpoint, a couple resistances, so that's the red rectangle, but we've also got that widening wedge pattern that I showed you guys earlier, the white line, which has been following us since 2021. So that's also coming up for Tesla. So this is, a place where Tesla could come up with a lot of resistance, a lot of supply in that area. So that's going to be sitting right there. And that's going to be between $280 and $320. So these two prices, keep in mind, that $40 range, there could be a lot of supply, a lot of resistance for Tesla at those prices as we come up to those levels again, because we have already gone rejected here, in the past. Look at amount of resistance here for Tesla. Like, we just weren't able to break out. Like, we tested once, twice, 3 times, and eventually all the way down, crashed down here for Tesla. Like, literally look at that sell-off, right? It was brutal, the amount of volume that picked up around that time for Tesla. So there's a lot of supply sitting inside this box here. So Tesla's coming up to a very, very important level of resistance. So what I'm going to put down here is broader uptrend, shorter downtrend, but also at the same time coming up to an important resistance, right? Very, very important supply for Tesla. That's where we are coming up to at the moment. So that's going to be for Tesla, a little bit bigger analysis, but that's going to be for the company. So next one on the list is going to be, let's take a look, Tesla here again. We're just going to skip that. This is more on a shorter time frame. Advanced Micro Devices. Now, AMD, I will give them that. They have broken out. They have done a very good job in breaking out. So this right here was the uptrend of higher highs and higher lows. Then more recently, we started kind of trade inside this downtrending channel, lower highs and lower lows, and kind of had a little bit of a breakdown here. And then the Microsoft report comes out. We're back over $100, and this is a very nice breakout from this lower highs. So we were constantly getting rejected, once, twice, 3 times, 4 times we come in, and then we see a very nice breakout for advanced micro devices. You can see a very nice green candle on Friday, and the next level is going to be at closer to $112. So this right here is going to be that level to watch for advanced micro devices. We're going to be coming up to that resistance here, as we have previously gone rejected at that level in the past. But what I will say is that the downtrending channel, at least in my opinion, is no longer validated, but we do still need to make a new higher high, right? So we do need to still make a new high. What that means is that we are right now still below the previous high, which is this right here. This is the previous high. We're still over here. So you can see that that high is still lower than the previous one. So what needs to happen is a breakout above 112 needs to happen in order for this high to be lower than this one, the new one that we make, right? So that's going to be that higher high, and that would most likely confirm a potential shift in that overall direction for AMD. So what I will put down is for AMD, nice breakout, awaiting new higher high, right? That's what's going to happen. So nice breakout from the downtrend. So basically downtrend breakout, and then awaiting new higher high for advanced micro devices. Next one on the list is, again, AMD, same thing. We're just like a zoomed in chart here. Now looking at NVIDIA is very much in a horizontal pattern. So it's not coming up with an uptrend. It's not coming up with a downtrend, but it's really been in a range where the support level's been at around $400 and the resistance been inside this red rectangle, sitting roughly around $480 to as much as $500. So this right here has really been the overall pattern where it's just been consolidating sideways for the most part. We do have a couple gaps, to fill for NVIDIA here down below in the 340s, 380s, but I think that's for later. But right now we're just getting validated at that support very, very nicely at around $400, and we're pushing back up. So horizontal pattern. So what I would put down is a horizontal, horizontal pattern coming up to resistance. Right, so that's where we are. We're just pushing higher. It's possible that NVIDIA sees a little bit more upside, kind of retesting those highs once again in the $480 level. That's exactly where we have gotten rejected in the past. Next one is going to be Meta Platforms. Meta with a very nice breakout and a higher high. So Meta is one of the only few names that not only did see a breakout here, so this was a massive green candle here for Meta, breaking out over to $312 per share, but also making a new higher high compared to the previous high where we got rejected. So as small as it is, but this is still signs of strength that we are actually making a new higher high. And I could also argue there was a higher low in place for Meta because we got rejected here, validated here, support, we got validated support here. So that is, again, a higher low for the company, and that higher high can just be starting to form. So that is some signs of strength here. So Meta would certainly be in an uptrend now. So basically breakout plus an uptrend at the moment for Meta Platforms. So this is, very, very few companies, or actually this is the only company that's actually showing signs of a very nice potential uptrend here. Now looking at Microsoft still in the context of a downtrend. So it's still very much in this lower high and lower low, but it's coming up to its resistance here. So that's the lower high that it's coming up to. In case we see a breakdown above this level, so let's say on Monday, Tuesday, we see a very nice breakout. Really the level to beat here is going to be this one. That's going to be sitting at $340. The moment it breaks past 340, so for example, breaks above this level, then all of a sudden we've got a new higher high. So that's good. And then that's going to be a breakout and a shift in the overall direction for Microsoft. So coming up to its resistance. So what we have here for Microsoft is in downtrend intact, coming up to lower high resistance, really. So that's going to be that analysis for Microsoft. And finally, we've got Google, and Google here was in an uptrend, then it sold off, and it's got a very similar pattern to NVIDIA, where it's really just trading sideways right now. So we had a little bit of a bull flag here, then we got a very nice breakout, and then since we sold off, we pushed right back up, a little bit of that V-shaped recovery, but overall, broadly speaking, we're still in the context of this sort of a range where we're coming up to that resistance at 139. And that support level continues to validate at 126. So for Google, it's going to be a very similar pattern to that of NVIDIA, where we're coming up to a resistance right now, and this is really gonna dictate whether we see a further breakout to the upside, or if we start getting rejected and sell right back down to that support at 126. So what I'm gonna do is the same thing as NVIDIA, horizontal pattern coming up to that resistance right now. So this is where we are, and if you basically kind of put them into context, so downtrend for two stocks here. Meta, I would put in a green because it's a bit of an uptrend here, so we'll put put that in green. Downtrend breakout awaiting new high, I would put that also in green for advanced micro devices because of a very nice breakout. Horizontal patterns are kind of neutral, so they're not really, there's no bull or bear kind of actually winning right now. But considering that they're coming up to a resistance, that means there is momentum behind those stocks, right? So I'll put them in somewhat light green because there is potential for these to see further breakouts, of course, if the markets continues to see some more upside here, right? Tesla, broader uptrend, shorter downtrend, coming up to an important resistance. It's really gonna dictate, so I'm gonna put that in somewhat orange because we are not sure exactly how Tesla's gonna react at that resistance up to $270, $280, $280 to $320, so that $40 range that I mentioned earlier. And then for Microsoft, it's also coming up to that resistance, so we're not sure exactly how it's gonna fare up against that lower high at 340. So the way it kind of lines up, we have a lot of big tech, Google, NVIDIA, AMD, and Meta coming up with very nice momentum and breakouts. Apple and Amazon are still somewhat struggling in a downtrend, and Tesla, Microsoft really hold the key to whether the markets can shift this overall trend from a downtrend to an uptrend and see some breakouts. So that's the entire analysis. Let me know your thoughts down in the comment section below. Hopefully this was a little bit more valuable and kind of clears up the technicals that are underlying for the Magnificent 8 stocks, within the S&P and the NASDAQ. So let me know in the comment section below. What do you think? As always, if you enjoyed it, found it helpful, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. And as always, happy investing. I'll see you all in the next video.